Cisco, what do we got going on with Cisco? Now, I do own Cisco as a dividend growth stock. I am holding it for the extreme long term. I'm not trading it. But if you are trading it, I think we're going to be going down just a little bit. I think we might be finding a bottom as we look left, and we have to come all the way back into May and see there's a bunch of support around the $40 level after it did come up from the market collapse. This is more of an anomaly because everybody was panic selling everything. So every stock, gold, Bitcoin, you name it, it was down on the 23rd of March. So this is kind of an anomaly right here, but coming back out of it, look left, a lot of support around $40. So I think we're going to start hitting a support level right here. On the CCI, I do see some, it's that southern accent going, I see some bullish divergence here. So we have a bad low here after the drop when everybody started dumping it. And you see a higher low right here as price is moving down. So if I was a betting man, I would think that we're going to jump up. Now you see it did come up through the negative 100 here and it didn't work out. But when it did come up, there was a little bit of a bump up. Every time it comes up through negative 100, price will move up or chop sideways, and that chop sideways is what you want to watch out for. And here it did not work out. So if you are a trader, man, conserve your capital, make sure you get in, get out. The MACD is still heading down. Remember what I always say about the MACD blue bars. These blue bars are the difference in price between the between the slow line, which is the red line, and the fast line, which is the black line. And it's risen up a little bit. There's always a snapback. If it drops down too far, it comes back up. And you can see we are oversold on the RSI. So it's been oversold. It can be oversold for many weeks, but odds are there's going to eventually be a pop-up. So I wouldn't look for anything short-term. I do think that we are going to still hang around the high 30s, low 40s for a bit here, but I do think we have a lot of good support around the $40 level line. So if you're trading Cisco, I'm going to wait a little bit, and I would wait for it to pop up through the negative 100 line on the CCI again before I would get in. Oh, goody gumdrop for Tesla. And Tesla did what I said it would do. This worked out beautifully according to the CCI. Made me look all prophetic and stuff. As I pointed out, when you see a bearish divergence on the CCI, it's usually time to get out as soon as it crosses through the 100 line. And by bearish divergence, I mean you can see a high here, lower high, lower high. It's making lower highs. So here's my line I drew right here. Don't be distracted by this sleepwear. Don't know what that is. I swear I'm not looking that up. So here you go. You see the bearish divergence. You see the line I drew, the lower highs as price is moving up. And as price is moving up and the CCI is weakening, it's time to get out. And sure enough, it was right around here when I said there's a dip coming. Didn't know how much, and it was bad. It was a bad dip. And I think we're bouncing now. Hit a little bit of resistance around the 21-day simple moving average of 397. So I think 400 is a bit of a resistance area. Everything's turning up. You see the CCI is pointing up. The ads are blocking me here. And the RSI is pointing up. But we may have resistance right here around the 50 line. So I'm seeing a lot of resistance around the 400 level. If it breaks through 400, I think it could test that 502 again, test the 500 level. Hey, if you're a true believer, stay in it. But I did swing a trade just from 348 to 390. Made a few bucks there. Check out the blue bars on the MACD. See, we come up, snap back down, snap back up, snap back down. So guess what's going to happen? There's going to be a snap back up. So we don't know how short these are going to be or how long they're going to be. But I am confident that Tesla is going to come back up. Don't know where. Tomorrow's going to be an interesting day. Got to wait for a confirmation candle. But tomorrow will be interesting. I will be looking for a close over the 21-day simple moving average, which right now is $397. So if Tesla closes over $400, I think it might be setting itself up for a good run next week. Peloton has been in the news, so let's take a look at Peloton. Big bear candle today. Bearish engulfing. You can see that almost the entire day's action from the previous day was in it, but the real body was inside the body of today's bear candle. So that is called a bearish engulfing. That is a bearish sign. and I would be looking for Peloton to drop. I think it's going to drop. Now, if you look left, check that out around the 21 simple moving average. Lots of support. Very rarely ever goes below and stays below. And if it does, it's a real quick dip up. Here we had a few days where it was down below it. But a lot of support. Doesn't go anywhere near or close near the 60-day. So in my opinion here, I think we're going to see Peloton drop to about 74, 75 bucks before it bounces back up. And yeah, again, look at the CCI. Anytime you see it, check it out. We go up over 250, 300. When you see it get to these really high levels, you're almost certain that some semblance of a drop is going to come. We were up here now, 92 down to 72. Now back all the way up. So that's actually forming a double top. So we had a 92 and then it had almost 100. So I believe we are going to be going down, and this could be the start of bad things to come. The RSI bounced off the 70 line. Going to be fun to watch. This is why I say I love it. I love waking up every day. I make these predictions, and I love to see what happens. But if I was in Peloton and you got in down here, I'd probably start locking in some profits, especially when you hit a high level once, bounce down, then hit up again and bounce down. That is definitely a bearish sign. So again, lots of support around the 21-day simple moving average. So I could see that holding again. And if it breaks through and closes below the simple moving average, which in a few days will be in the low 70s, mid 70s here, I'd get out. DraftKings, right off the bat, this jumps out at me. The CCI over 200. Look at every time it goes over 200, there is a little bit of a pullback. So we almost had 3 white soldiers here. They would be 3 white soldiers if the open of the last day was within the body of the previous day, and the same for that one. We didn't have that. So not technically, it's close to 3 white soldiers. And you can see other times when we have this recently, back in July, there was 3 white candles and then a bit of chop sideways, and then it dropped, and then just up, down, up, down. Look at this, just up, down. It's almost like clockwork. So I'd say we're going to be having a down here. I would expect it to, again, 21 simple moving average and the 60. They're both in this area. So I would look for DraftKings to be pulling back to the $36, $37 area before going up again. Almost a triple top. Here's 1, down 2, down 3. If that's a triple top and starts coming down, keep your eye on that. Look how long it can stay overbought. It can stay quite some time. DraftKings was overbought for well over a month. Check that out. So in my opinion, if this is a true triple top, look out. But I think we might be bouncing off the $36, $37 range and going up to retest these highs once again around $45. And the last one, this is going to be just fun for me. So we're going to look at Kodak. And just look at how silly this is. When I saw this, I said, oh, no. No, don't. You know people are going to be buying up around this level. And if you bought, I'm so sorry for you. This is a lesson you'll learn. I saw this thing up around 600. That is into outer space. I said, oh, no. This is going to come down. Look at the past, just the little blips. When it goes over 200, she's coming down. As soon as I see that $60, I said, oh no, it's going to come down. Look at that, from 60 all the way down to $6. Wah, wah, wah. If you bought there, I am so sorry for you. But hey, this is how people learn. This is how we learn. Honestly, if I was in this thing, I would have probably gotten out right around here. I don't even think I would have held that gap up. Remember that more often than not, gaps fill. But just everything was showing. Here's my snapbacks on the MACD. Way up. Violent snapback down. It's just the way it is. You see this stuff over and over. Same thing with the RSI. When I saw this stuff, good Lord help me. When the RSI was almost 100 and the MACD was just insane levels. CCI insane. No way. This is just fun for me to look at and share with you guys. When you see this stuff, don't even bother. This is just playing with fire if you think you're going to get in and ride this needle all the way up. And you're going to get out because it could have went here and before it dropped. So anyway, people that bought here, they always... So there's a saying that the market gives you second and third chances sometimes. If you bought around here, you had a second chance to get out when it opened up over here. So that's what happened. That was a gap that filled. All right, so that's what happened. That's a gap that filled, you can see. So this is where it opened, and this is where it closed on this candle. That was a big gap in the morning because the close was right here. So there was a gap from here, and that dropped down. I guess what I'm saying is if it was me, I would not put my money into Kodak. Stay away. Stay far, far away from Kodak.